Rising recession alarms, a looming Fed shakeup, and Trump firing tariff threats like there's no tomorrow. You can't make this stuff up. Between record high stock valuations, a seasonal stretch that's historically brutal for equities, and fresh weakness in the economic data that we're getting in, this could be just the setup for one of the sharpest pullbacks we've seen in 2025 so far. So what we're seeing is that markets have been on edge the first week of August, which it shows it's living up to its reputation, with August being a slower month for stocks performance-wise. And stocks are showing that they have stumbled. And Wall Street is warning that this could be just the beginning of a larger pullback, with Evercore ISI's Julian Emanuel calling for a pullback of anywhere between 7 to 15% by mid-October. And Deutsche Bank, they believe that there will be a milder slide, but still expects a weakness in the economy with some considerations like these stock valuations that we got in. So this is the Shiller-Cape ratio, and what it is a valuation measure that compares the current price of the S&P 500 to the average inflation adjusted earnings over the past 10 years. And it is used to assess whether the stock market is overvalued or undervalued and forecast long-term measures. So this measure we're talking about, it just topped 38 in late July. And you can look at this chart. This is the most expensive it's been since late 2021. And like I said, you could see this chart right here to just see how we compared over the years. We're at a high point in just this metric. And then seasonality, that's something else we need to consider, because August through October is historically the weakest stretch of the year. September alone, it's a tough market where we see for the S&P 500, on average, it drops about 1.1%, going back since 1928. And then technical measures like the RSI, which the RSI is a momentum oscillator used in technical analysis to measure the speed and magnitude. This is pretty worthy of price changes in a security or a stock, for example. And what it helps is to identify whether a stock is overbought, which would be above 70, or oversold, which would be a reading below 30, providing signals of potential trading decisions on which way the market could potentially go. The RSI right now it topped out at 76 late last month, well in overbought territory. And then I just had the VIX displayed. The VIX jumped over 20 for the first time since June. So we haven't even talked about any of the economic data that we've gotten in between the jobs report and the services data we got today. We've just been kind of looking at some of these other considerations. And with the VIX starting to jump up and all of these other alarms, it's just like everybody's putting their ears up to what potentially could happen. Now, let's talk about some of this data. So overall, we already talked about the jobs data. The jobs data showed that we just created 73,000 new jobs back in July, which didn't line up with the expectations of, I believe, like 100 to 115,000 jobs to be created. But that wasn't the bad news. And the bad news kind of leaks into, well, what are July's true numbers? Because the revisions are what everybody were paying attention to for both May and June. And what we've seen is that they were massively revised down. And it has traders piling into bets that the September Fed cut is now on the table. And the markets are pricing in, I believe it was as high as 90% chance of a 25 basis point or 0.25 a 0.25% off of the Fed funds rate, just based on the data that we got from the jobs report, because it's showing that the labor market is weakening. And if we're facing, here, let's talk about this in a sec. So let's look at the ISM data before we get in there, which also came in pretty weak, adding to further slowdown fears. Let's get this out and kind of zoom in so you can see it a little better. So the services PMI indicated expansion at 50.1%. So just remember that. And then the business activity index, you can see it right here, I got it highlighted, remained in expansion in July, registering 52.6%, 1.6 percentage points lower than last month. They make it really wordy here. It's almost distracting. And then the employment index was in contraction territory for the second month in a row and the fourth time in the last 5 months. the reading of 46.4%, which is a 0.8 percentage points lower than the prior month. So just think about all of this. There's contraction in the economy, and we're seeing that. But let's look at this little segment right here called prices. So prices paid is actually increasing. It increased by 2.4%. And I wonder if Siri, if I could unlock this real quick. Here, let's unlock my phone, because I got a question. Hey Siri, what is stagflation? Stagflation is the combination of high inflation, stagnant economic growth, and elevated unemployment. I thought Siri would be cool and read it to me, but she didn't do it. But these are all recipe for disaster in the face of stagflation. And the services index, the service side of the economy, is a huge contributor to GDP. And the GDP is what they use to gauge whether or not we're going into a recession or not, or looking back 2 negative consecutive quarters of GDP. But services plays a huge role into that. Now let's talk about the Fed's power shift. So Trump's opening Fed Governor Adriana Kugler just resigned. So there's this opening in the Fed, the FOMC, Board of Governors. Now, what this is doing is giving Trump the rare chance to tip the balance of the FOMC before Powell's term ends in 2026, I believe around May. And Trump says he's really narrowed down the field for the 4 candidates he wants to pick to replace Jerome Powell when this term ends and that seat opens up for the Fed chair. He noted that Bessent is out, that he loves Bessent, Scott Bessent, Treasury Secretary, and that he wants to stay there. So he narrowed down to 4 other candidates, which he only told us 2 of. So former Fed Governor Kevin Warsh and then the NEC Director Kevin Hassett are both the 2 top contenders. So Adriana Kugler was considered a hawk, and replacing her with a potential dove could shift the Fed towards earlier, deeper cuts because more people support cuts. And remember, Trump only told us 2 of the Fed contenders. Who knows if Michelle Bowman and Christopher Waller are the other 2 contenders, or if they're completely other people. But something to remember is that they will have permanent votes. So I'm sure he'll play the chair really important. But as far as replacing Adriana Kugler, some people are thinking that it might just be this temporary position, but we're still watching to see how this one progresses through. The Senate is out until September, so confirmation before the next Fed meeting is unlikely as far as what to expect, but political chess is already in play. Now, tariffs, because tariffs are still here and they're still coming in. So India, let's start off with, well, first let's talk about China, because China, the deal with China seems to be going pretty well. Trump said the U.S. was getting along very well with Beijing and that a deal was close, and they pretty much extended their truce so they have longer time to renegotiate. On the other end, India, Trump's pretty mad at India right now. They're facing a 25% tariff, with Trump threatening to hike it substantially over the next 24 hours over Russian oil purchases and how they're supporting this Ukraine and Russian war going on. And then substantial hikes in both pharma and chips as far as tariff goes. So we didn't get much information from semiconductors, but tariffs on semiconductors to be announced next week, and we're expecting an increase there. And then pharma tariffs, pharmaceuticals. Trump wants all of that made here locally, here in the U.S. So he's talking about phasing these pharmaceutical tariffs up over 12 to 18 months. So they're in like locked ranges. So start off here for the first year, and then the next year and a half start out at another rate, but going all the way up to 250%. Then Europe could face a jump from 15% to 35% of tariffs if their investment pledges aren't met. But on the other end, Europe wants exemptions on wine and spirits, which play huge roles into their economy as far as what they export outside of their country. So we're wondering what's going to really happen with the European Union and U.S. tariff deal, because it seems like it was settled, but now they're not living up to their $600 billion investment that Trump could use to invest into anything. We'll keep on watching that one. And then with Switzerland, who is stunned by their new 39% tariff levy, sending their president to Washington, D.C. in a last-ditch attempt to avoid this huge tariff blow for them because it's too high for them. This man's so unpredictable. And then not even just there, we're not done yet. He's targeting everybody. So Trump is reportedly drafting an executive order over targeting banks that drop customers for political or crypto-related reasons, with the possibility of fines for non-compliance. And this could become another regulatory flashpoint. Trump said that he tried to open up an account after his first term as president with JP Morgan and I believe Bank of America, and they denied him. So they say that they're not being political. It's more so dependent on whether or not the person's doing fraudulent money laundering kind of activities or their reputation. That's more so why they say they decline somebody. But we don't know. We'll just keep on watching how it progresses through. Not a lot of news today. I'm off this entire week from the bank, so I'm just kind of kicking it and, just relaxing. But here's where we stand. Valuations are pretty stretched. Seasonality is against the market historically on average, and volatility is creeping back in. While the Fed is staring down fresh political pressure just as rate cut odds surge. So the market's pretty much made up their mind on what's going to happen in the next meeting. It's whether they're cutting by 0.25% or 0.5%. And then trade tensions are heating up even faster, it seems. Even though the deadline behind us, that August 9th deadline or August 1st deadline, that's behind us and they're still heating up. So the economy, for the global economy, is bracing for impact. So we're in one of these weird times, weird windows where politics, policy, and price action are all colliding, and the next few weeks could set the tone for the rest of the year. Stay sharp, because the calm that we're seeing right now might just be the quiet before a much larger move. Thank you for being here, everybody, and I'll see you in the next one.